So let's go ahead and get started. I'm gonna go ahead and share my screen. So we're on TradingView as per usual, and there's a couple things I want to look at. So first off, I want to look at what happened to pound pairs yesterday. So we're gonna go ahead and pull up GBP USD, or the pound versus the US dollar. Let's see if we can get rid of all this. So if we look at what happened on the 1 hour chart from what we marked up yesterday on our previous session, we can see that there was a lot of signs telling us that this level here was going to be a PRP, which is price reversal point, more specifically a ceiling, as price was coming up to this level. What we saw happen is we saw initially respect it. It went down just a little bit and then came back up, broke up, and it then found support instead of resistance at that level that was a ceiling. The ceiling then became a floor. So this is no longer a ceiling at this moment in time because of this. So I'm gonna go ahead and zoom in. This is something that a lot of people don't know how to specifically trade. They think they know how to use it, but they don't know exactly how to do it. So all it is when you see, I'm gonna use this one because this one wasn't even very good anyways. When you, in this circle here, if you look at the bottom of the bodies of these three candlesticks in a row, you'll notice something. They look very, very similar to where the bottom of the bodies are. And there's a specific reason for that. That's because that is a very, very strong now level for this pair. Price tried several times, and even the wicks, if you look at the wicks levels as well and move it down just a little bit, you'll see that even the wicks as well as the bodies are also the same levels. So because it's the wicks and the bodies, you actually wouldn't want to use the PRP. Because it's both, you actually want to use the PRZ, or price reversal zone. So how I like to draw my price reversal zones is you use the rectangle tool. You make sure that magnet tool is off. You definitely do not want magnet tool on when drawing these. And then you just want to make sure that you capture not only the whole entire one of these candles, because they're so small anyways, but also from another level that you can find of maybe less powerful support and resistance. So for the top, I would say this bottom wick of this doji right here, I like that a lot because it's also the same level as these two candles right here. So that's 3 different levels, and this one is also very close, where that was at its level. So I'm going to start my drawing from the top there, and then again we want to encompass these 3 candles completely. We want to make sure they're inside of our zone. And then so for the bottom one, I don't immediately see anything that really strikes me as being powerful. This level here looks okay, but that's pretty big. I wonder if we can maybe make a smaller one. So we can do is we can just go backwards in time as well, just to see if anything starts to line up. So let's see, maybe let me put it there for now, and let's see what happens if we extend this over. If you don't know where I'm using these the tops of these 2 wicks right here, and then again we're also using the tops of those candles. I'll show you really quickly. So using the top of these ones, and then if we zoom in over here, it's also the top of this candle. and the bottom of this doji. It fully encompasses this doji. That's pretty much what we're using. So then this is our price reversal zone. So how do we use this price reversal zone now? Again, this is price reversal zone with a Z, not point with a P. So instead of a normal price reversal point, it's okay for it even to break. These candles here that go below it are, are not rejecting the zone yet. So because we're on a relatively shorter time frame, this is the 1 hour chart. When we see the long red doji come down out of the zone, this does not mean it's a sell because you would need a confirmation. So this green candle coming back up, breaking through the zone, also not. This candle here, however, along with the next two candles, these ones are signals that I'll show you exactly what I'm talking about. These two candles, this green one and this red one, those ones are signals that you should be looking for a potential buy soon. What you want to wait for is a bounce off of the zone with the wick again, because it finished above and didn't even touch the zone. It's a little hard to explain what I'm trying to say. So I'm saying that price went above, it finished above, and then now we want to see where a wick comes into the zone, but then price finishes above. So we see that right with the next candle. This red candle here, very, very small wick. It pretty much finished on the zone. And then afterwards, we then saw price come up out of that. It tested again with the wick, but it did not finish there. So that's all good. This is a successful breakthrough of the price reversal point so far. There is a lot of bearish signals from other ways of trading, but just with PRZs or price reversal zones alone, this is a break. It is, of course, not a 100% accurate way of trading. There is exceptions. This is not one. So this is all price action, by the way. This is very, very technical. This is literally looking at the individual candlesticks. It's kind of like a Japanese trading style where you try to find dojis and things of that nature. But instead of finding dojis, you're looking at where the candles break onto a zone. So you'll notice that the last candle that formed was a pretty weak hammer. It was strong that it was the high. There's nothing higher than that, the top of the wick of that candle for a long time, which just gives it strength, but just so small. And because its size, I don't really know how to feel about it. It's kind of in the middle. So what I would expect to happen is potentially we could see a short-term downtrend on GU because of the hammer. Again, hammer, a good way to visualize what a hammer does. It's a resting hammer. So it's the big part of it is on the ground, and then the handle is above, and there's a very, very small point that sticks below the actual body of the hammer. And you have to think of the hammer as it hitting the price downwards, because usually when people use hammers, they rarely hit things up. They almost always hit things down, whereas dragonflies are the exact opposite of hammers. And dragonflies are the ones that usually fly up. If they start at the ground, they usually fly up. They don't usually fly down so much. That's one way I like to visualize hammers versus dragonflies. So that's all I see on GU right now. It overall, because it broke the zone, it should be good for the buy, but I definitely could see short term coming down again, coming down for maybe a better entry. So I definitely do not recommend getting into this right now if you're not already in it. And let's go ahead and look at another pair. Let's go ahead and look at another pound pair, but this time GBP, JPY. This is the pound versus the yen. I have no idea what these are. Why are these here? So these are just really off. These don't even touch. Wow, look at that. We drew this line yesterday. If you were on my session yesterday, you should remember this line. Let me zoom out a little bit. So maybe we'll look a little more familiar. Let's go into the daily actually. So this is when we were looking at proper risk management from yesterday. This is my Instagram, in case any of you want to follow me, go ahead. So what I did here was I used this one. That you do want to use the magnet tool. Again, the magnet tool is right here. It's a toggle. So once you have it on, you don't have to click it on every single time. And it's good for some tools and bad for other tools. For this line, it is extremely good. So because you really want to be extremely precise with this one, because it's best on long time frames, and when you're using long time frames, you want to be very precise. So the magnet tool, basically, it snaps to certain locations. So what I did is I put one location here at the very, very top. It is to the micro pip at the top. You can see the little dot there. And then for the other one, actually, I can even remake it if you want. I used the farthest outstretching point. Again, what I mean by the farthest outstretching point is basically if you're moving this line up and down, just the first point that it touches. So you could say, oh yeah, it touches here. Well, it does not, because all these points here touch way before that. So if we go down, the very first wick that it touches right there at the red. So this was from yesterday. And as of today, we see that it just bounced off of very, very small bounce. It's not a big bounce yet. That's definitely a hit off of the wick of the daily candle. So because of that, this would be very, very bearish. And just to add strength to this, this is a piercing trend line, not a normal trend line, meaning that it pierces the chart. We see here, look at this. These points are not marked. These just so happen, or not really, they don't just so happen. It's not random. Look at the bodies of these candles here, and look at the wicks of those candles. These are perfect hits. Even that one, it did break right after, but even the body of that one finished on this line. So that's telling us that this is most likely a very accurate, very strong, piercing trend line. So actually, I'm going to go ahead and screenshot this one and put it into the chat as well. I'm going to put this on here too from yesterday, in case anyone wants that on there. Has anyone had any experience with piercing trend lines, or is this new for everyone? Oops. Why didn't that work? I don't know why this came up. Yeah, I can go over it again. Okay, there's the screenshot in the chat as well. So yeah, let's go over piercing trend lines. So piercing trend line is really simple. It's very, very similar to a normal trend line. It's just when it goes through the chart, and that way it is able to use the price, or the trend line, as both support and resistance rather than just one. So what I mean by that is if we look here, when you're using this tool, by the way, if you're using any of these actually, or almost any of them, the rectangle or the ellipse in particular, you definitely do not want to have magnet tool on. It gets really annoying. So right here, we see it using the trend line as resistance or a ceiling, so it comes down afterwards. The same thing here. Again, I'm using the body of the green candle. It didn't work out very well in that scenario. It only worked out for a couple of pips, but that's still a hit. It's not a very good hit. And then here, it's the complete opposite. Here, it's using it as support. Also, not this lowest green candle, but the one before it. I don't know if you can see that. The wick, I'll go ahead and zoom in so you can see that a little better. The wick of this candle even used it as well. These two candles are anomalies. They just broke it because they wanted to break it. Maybe it was a news event that was too powerful for the trend line. Not sure exactly why that happened. So even here with the body of the red candle right on the line, that was not very powerful, so I'm not going to highlight it. But then we go up to a little more modern data, and we're able to use the other way. So this is basically, it's very similar to a PRP in that it uses both support and resistance, except for it's not horizontal. It's diagonal. And then most likely there is another hour. I used to have my session over the day change, but it's no longer on the day change. So this could still break above, but I have a good feeling that it won't. I do not think that within the next hour this will break the trend line. I'd be very, very surprised. I think what we could very likely see is a downtrend from this. The only reason why I think we might not see an overall downtrend from this is because it just happened. It just touched right before. This isn't very long relative. Of course, this is the daily, so it is a pretty long time. But relative to these other hits, I mean, look at that huge gap there. These are very close in comparison. So because of that, it's very likely that this will just continue up, but we'll have to see. So definitely want to check GJ tomorrow. Tomorrow at 3 p.m. local time, which is Mountain Standard Time. You definitely want to check GJ and look at this line. Again, if you don't know how to draw the line, it's from this point to this point. And if you don't know how to get that particular trend line, I did not use the normal trend line. I used the extended trend line. That's right here. It looks like some weird glasses or something. And what we're looking for is if the next candle by 3 p.m., when it finishes, is that candle a red candle, a green candle, or a doji? If it's a doji or a red candle, we would say in 2 days from now, we should then see another red candle. And then if it's a green candle, then we want to see more green candles after that, because that would mean an extension. So let's go ahead and move on as well. Actually, before we move on, let's see if we can find a little more. What do you call it? Maybe something. Let's see if we can use a Fibonacci level to, wow, just look at how perfect that hit was. That's crazy. It's exactly on it, and I didn't even use that point. So that would, wow. So let's go ahead and use a fib on this. And now for the Fibonacci's, you sometimes want to use the magnet tool. If you want to be really precise, you should, but I'm pretty good at eyeballing it at this point. I'm not really eyeballing it. I just have a really big screen, so it makes it pretty easy. So initially off of just using low and high, nothing. This is not at a point at all. The levels do mark up, but this is not one of the markups. So this would not indicate anything from the absolute low to absolute high. But maybe if we use different levels, such as perhaps an extension. I don't know. I haven't actually checked this yet. I'm checking this with you as I'm doing this, just seeing if anything lines up. If not, then it's even more likely to continue up, which is very likely. I'm not seeing anything at any of the major levels from this with the extension. Again, what I mean by extension, I'm using the -618. That's the same thing as the 1618 if this was reversed, which is what people are usually more used to. It's the exact same. There's no difference at all. So yeah, I mean, I'm seeing levels to say that this would be the top, but not where it is now. At least using the bottom. Wonder. Yeah, still nothing. So at this point, we this definitely would be a bullish sign because it's at an extremely critical point, and the Fibonacci's don't support it as far as I can tell. Well, I wonder. I don't think if we use this level, it'll work any better. But we can use the absolute low as well. Just good to check them. Yeah, that's not even close. So because none of the levels support where it is right now from using the relative or absolute highs and lows, I would say that this is likely to continue up. I think this most likely is a fake. I think it's going to go up and make a new relative high, according to what at least Fibonacci's as well as the frequency of the touches is telling us. So we've been looking at pound pairs a lot. I want to look at another thing. Let's actually, sorry, one last thing with pound pairs before we move on. I want to look at the BXY. So the BXY is the British Pound Currency Index. And that's just what I thought. So what the BXY is, it's very similar to the DXY, which I'm sure a lot of you are very familiar with. Instead of the US dollar, it's just the pound. That's the main difference. The other difference that's really key as well is this one is not open all the time. It's not open with normal Forex hours. And what we also see here, let me extend this over just a little bit more because I definitely see something. If we look at this on the BXY, let's use the body instead. There we go. So if I use the body of the bottom candle, oops. Use the body of the bottom candle, we can see that very recently price broke above this level, which isn't a very powerful level. I think this is the, what is it, 236, what I thought. And then it came back down, tested off the level and bounced up. So these are all bullish signs. Again, just because the previous hour was a very weak hammer, again, it looks very similar to GU. They're very correlated. So it's hard to say what will happen in the short term. I could see it going down, but at the same time, it looks like the hour's about to finish in 30 minutes and 30 seconds. And that's definitely a green candle. So I would say that it looks like it's just good for the buy overall for now with the pound. And if you're wondering why pound has been increasing so much lately, this is why. Basically, it was coming down for a long time off of a very, very strong hammer. This is an extremely strong hammer. Look at that huge, huge wick. I'm actually going to remove the daily, the session breaks. So you can see this a little better. So this hammer here, it had a very small body, very small lower wick, very, very long upper wick. In fact, it broke through a fib level. It was so powerful. And look at this, the top of the wick. Let me draw a line just to illustrate this really, really well. Top of that wick was at a price reversal point. A very strong one at that. Look at all these hits. And it went all the way up there just to touch it. And then it ended up as a hammer. So because of that, we saw price going down for a long time. And then very recently, we saw it doji out and move upwards. So let's go ahead and get away from the pound pairs now. Said we're going to do that earlier. Let's look at AUDUSD. Actually, how is everyone, before we move on, is everyone feeling very confident with the pound pairs? Does everyone understand what the BXY is and those other indexes instead of the DXY? Awesome, awesome. I just have these little notes everywhere on my thing from the beginner sessions or previous sessions. Kind of funny. So this is the Australian dollar versus US dollar. And I haven't looked at this one yet, actually, but I want to look at it with you live. Let's see if we can find anything useful. So right away, I want to use the extended line with the magnet tool to get this exact bottom. And then also we're gonna use the same thing, just the closest hit. So just by moving it up, we see that right there, this wick hit first of anything. So this is the baseline, is what I like to call it, but it's not really I mean, baseline is kind of the wrong word because I feel like that implies that it's a horizontal line, whereas this is definitely a diagonal line. But this is the level that you wouldn't want to sell AUDUSD until it at least breaks this level, because that other than that, it would still be good for the buy. And it's at least if you're a long-term trader, that is, of course. This is for long-term trading strategies only. For short-term, this has nothing to do with anything. So if we throw, oh, looks like the next hour just finished. And if we throw a fib from the absolute bottom to the recent high, one thing I'm noticing is there's only one level that really has much significance, and that's this 786 at the bottom. You see there's lots of hits off that one, but looking at the other levels, I don't see so many hits. So what we can do in this situation is we can use what's called a future fib. A future fib is just what it sounds. It's a fib using a point in the future, a price that it hasn't yet to hit. And so let's just start there. I'm gonna you usually want to turn off auto, which is right here at the bottom right corner when using a future fib. And you want to lock that the bottom one in place if you're extending upwards, and then vice versa if you're extending downwards. What you're looking for, I'm actually going to put it back a little more though, just so we have a lot of data. What I'm looking for is I want to be able to extend this line and see if there's a level where a lot of price points like to bounce off of. And it looks like right here, I'm liking right here. The reason why I'm liking this level here is because of all these hits. I'm not going to highlight all of them because I know that takes forever and it's kind of annoying. I'm just going to highlight a couple of the ones I'm talking about on a few different fib levels. So on this one, we see, I just want to illustrate that there's lots of bounces off of all of the levels. So even that with the red wick there. And obviously these two. And then one more. So with these levels, we can see there's way more bounces using this as the high, which is an arbitrary point at this point in time, than the current high. So what that suggests is that this would be a lot more likely to be the absolute high. This would be the high that it actually stops on. This is the current high it has stopped on, but not necessarily will continue to stop on. So if we are looking for the buy on AUDUSD, then we would definitely want to have our take profits here, and we might even want our maybe even a reverse position if we feel extremely confident about it. So how can we feel more confident about this level? One thing we can do is use PRPs. So let's go ahead and get out our horizontal line and put it right on that level that it has yet to hit. So using this future fib, I'm going to turn auto back on just so it looks a little nicer. These are really, really close. Look at those. Wow. We see that there's lots of little bounces here and there. Lots of doji hits. Oh, look at that. That's a really powerful hit there. Lots and lots of hits off of this point that it hasn't even hit yet. It hasn't even hit this point, but it's still very likely that it will. So there's no time frame on this whatsoever. I mean, there is a little bit actually. That's not true. I was going to say that it could hit any time, but more realistically, we would want to see it before it hits this. So we'd want to see price essentially from where it is now. We want to see it enter this zone. Put it here. We want to see it enter this zone. And not only enter, we want to see a couple of candles, maybe 2 whole 1 hour candles, preferably green ones, that stay in the zone in a row. When we see that happen, but this is a little more advanced. This is probably going over some of your heads at least, but this is it's a really, really powerful thing. So I want to share this with you guys. So basically what happens is when it goes into this zone, you see maybe 2 candles finish inside of this triangle here. Then at that point in time, that might not necessarily be the best entry, but it would be a very safe entry. It's very likely that it will eventually hit this, the total future fib point before it hits our what I called the baseline earlier, or this extended line here. So it's not ready yet, because what could happen right now is you know, if price did decide to go down from where it is, maybe it could even go all the way down here, then it would still be good for the buy, which is kind of crazy. Just way better buy, because then that would be at the 0.5. So we can use these fib levels for a price that hasn't even hit yet. And it's pretty far away, but it's very, very accurate. So this is actually, if you remember from a while ago, I posted in my Slack channel group about a DXY was going to hit this level. The main tool I used for that call, which it did end up working out, was the future fib. So this is exactly what we're doing now. So again, I don't think this will happen, but we could see price come down as far as here. If it did go any farther down than the 0.5, this is all for nothing. This is all useless. I wouldn't want to see this hit even the 618. That would be too far. If it bounced off of the 38.2, that would be absolutely fine. Maybe even a small entry there. There's like a partial entry if you want on the 38.2. just because, I mean, that's a really powerful point already because it had that double hit. These are pretty close together and they're both pretty long wicks that touched. That does indicate very, very strong bullish movement to the upside, obviously. So overall, I can't exactly give you a trade. I can't say like, oh, buy limit here or sell limit here, or even buy stop. But this is something that you can keep your eye on. This is not, it's not ready now. Definitely do not buy or sell it at this point. I'd most likely, I want to see it go up, but at the same time, there's nothing telling me right now that it will go up literally right now. So just keep your eye on this one. I'll put this one, I'm going to put both arrows so it doesn't confuse anyone. I'm going to put this one all the way to the top. And then I'm going to put this in the chat. If you want, feel free to put these in my Slack channel too. And then we can all keep an eye on it better that way. Oh yeah, also from yesterday. So a couple of you asked about my channel, my YouTube channel yesterday. I upload a lot of these sessions to it. Right now, I put the link to my channel on my Slack channel for my YouTube. And if you ever miss a session, if it was a really, really good one, I usually only upload the ones I like the best. But they definitely, there's a couple of them already on there. There's a couple other lessons I made from about a year ago, so they're kind of old. They're not very good, honestly. But I will be making more videos and putting them on YouTube. So you definitely want to follow me on there as well if you haven't already. So with that being said, we have about 20 minutes left in the session. Does anyone want to share their screen and we can look at your charts together? Anyone at their computer right now is willing to do that? If not, we can just look at like maybe gold or something. Let's see. Yeah, if not, we can just let's just go ahead and look at gold because that's something I wanted to take a look at anyways. So looking at gold, I haven't looked at this for a while actually. We saw that price did eventually come down here to our level. It did break a little bit, but it pretty much stopped right where we thought it was going to. If you did hold this, which I don't know why you would, because honestly, that was a super long time. Let me pull the dailies back up. I remember I called this out a couple of sessions ago, a couple of weeks ago. I think when price was like here, I said, buy limit on the orange line. If you did hold that, then you'd be in profit right now. But I wouldn't blame anyone if they didn't, because that's a very long time frame to hold a limit for a buy. That would be 16, 15 days. Usually people don't hold limits for that long. So let's take a look at what would happen if you did. This is a good time to talk about risk management and how much money you'd be making if you did take this. Let's see how much you'd make if it just hits TP1, which is this green line up here, as well as where price is currently. So let's get out our text box. And actually, we didn't even measure anything yet. Just gotta measure it first. So from entry, we entered right here on that wick if we had the buy limit. And then it went down initially. Yeah, so initially it went down, had 34, 35 pips of drawdown. And that drawdown lasted for 12 hours. 12 initial hours. Its so far high was 224 pips. And then its current, if you took this trade, you'd currently be up 111. Let's go ahead and use that 111 number. That would be what you're currently in profit if you did take this. And then someone type in the chat, give me a number between, let's use a high number this time. Let's make it a little fun. Let's go 20,000 to, okay, perfect. You beat me to it. Okay, we're gonna use 30,000. Okay, $30,000 account. So who knows what proper risk management, what lot size would you use on a $30,000 account for using proper risk management? Who knows how much? What number would you use? What leverage? Yes, exactly. 3 lots. 3.00, which would make you $30 per pip. So I just want to make sure I do this right. I could probably do that in my head, but I'm gonna use my calculator. So currently, wait, is that right? Yeah. So currently you'd be up $3,330. In profit. And then I want to see how long that took too. Because obviously it did go higher before, but we're being extremely realistic here. We're saying if we forgot about this trade essentially, because I did forget about this trade, and then you're in right now. So that took a week. One week. And that was, hold on. Okay, that's what I thought. So yeah, that's 11.1. I don't know why I put so many decimals. 1% gain. So 11.1% gain on any size of account. So on the full account, that is. So that's current. It went higher before, and I do expect it to go even higher. So with that 11.1% gain on account in 1 week, now it's not necessarily realistic to say they were going to do this every single week, but who knows how much money you'd have if you did do that for all 52 weeks in a year. So if you don't know how to do that, you just use the little caret thing. So that would be $30,000 account times 1.111 to the power of 52. Your account in 1 year, I got a different number. They're close. I got 7.149 mil. I probably typed it in wrong. I bet Bird typed it incorrectly. Either way, it's a lot. Yeah, exactly. Either way, we can use either number. Off a $30,000 account, you'd have 6.8 or 7.1. Not sure who did the math correct. Probably Bird. And in your account, that's incredible. So this is all using proper risk management, very safe trading. this isn't necessarily the best pair to use full leverage necessarily, because gold is more, it is lean towards an exotic. It's kind of in between an exotic and a minor currency pair. Because it has more than liquidity of a what's it called? I'm blanking. I just said it. Of a minor currency pair has more liquidity than that, but at the same time, it moves so quickly that it's hard to put it in that category as well. So it's kind of in between both. You might even need to use a little bit less than proper risk management for gold, but overall, you should be fine. You shouldn't necessarily blow your account or anything because of using this. So that's quite a lot. And again, that's for current. Let's do one last calculation. It's probably a lot of math for most people. Let's do one more for just if it hits TP1. So that's 30. So one shortcut you can do if you are using proper risk management, so this is 304 pips. One shortcut is you can just take off another 0. So you already have to take off 1 because gold, and then you take off another 1. Then you get the percentage gain if you're using proper risk management. So this is 30.4% gain on account if you're using it to just TP1. So it hasn't happened yet, and it won't necessarily happen, but I'm just going to do the calculation really quickly. For $30,000 account, making 1.30, so a 30% gain, let's say a month for a year. That's pretty realistic. So times 12. So it's just to prove how much better it is to use compound interest, even though if you make 30% a month instead, then you would have, this is basically 700K here, which is obviously still really good. That's absolutely nothing to scoff at all. 30,000 to 700K, nothing to scoff at. But this 11% gain weekly, there's just so much more compounding that goes into that. That's why it's such a bigger number, even though it's less percentage, just because it happens so much more often and everything. One thing I want to leave off on is about compound interest. Is kind of I don't know, it's something that I saw in a post on from this one guy that I follow. Let's just go over here. Actually, let's look at NZD USD really quick. Perfect, because I like it. It's a blank chart. So who knows what would make more? If you had, if you made, wait, what is it? Okay. So are these the same? If you make 10% gain every month, let's use the M, because that's what we use for the charts. Or 20% a year. Who knows which one makes more? 10% a month or 12? Who knows how much more you make? Yes, it's actually by more than 90% total gain. So if you, I mean, 90% total gain is the difference. It's in total, if you're doing the year strategy, obviously you make you double your money and then you also make an additional 20%. Cool. If you do this one, if you do that every month, just because of compound interest, you actually triple your money and then you make an additional 10%, I think it was. Right, I'm gonna do the math. But it's quite a lot more. It's about 90% more for a year, just in that time frame. So this is just to illustrate how important it is that you use compound interest, use proper risk management, and you're in this for the long run. Because if you're in this for the short run, if you're scalping, I'm sorry, I have no respect for scalpers. They just all scalpers lose money a lot, and sometimes they have really good streaks, and it looks like they're making a lot of money. They're posting on Instagram. They're making it look like they're being so successful. What they won't show you is what happens the next day when they inevitably make a mistake, and their whole profits, because they're over leveraging, everything they have been making goes down to zero. So it's really important. I can't stress this enough. You do need to use proper risk management if you want to be successful. It's very important, and you can easily make a lot of money doing it. So there's no reason not to. So with that being said, I hope you all learned a lot during this session. I'm planning on uploading this one to YouTube. If you want my YouTube channel, it is in the Slack. It's in my Slack channel, the Blake Trade Talks. And I hope you all have a great day. Thanks so much for attending. I'll see you guys next week.